Good morning, traders. How are we this morning? Uh, this is Dynamic Trader, and of course, I've already told us that throughout this year, 2025, it will be all about Euro USD, Euro USD. So quickly, I want to share this Euro USD setup for today, being the 7th day of January 2025. And you can see I already have my charts marked up. All right, so I've already marked up my charts, and this is currently on the 5 minute time frame. And some persons will be like, "Why are you always showing smaller time frames? What's happening? Why is it not on big time frame?" I might not really understand. So, but my analysis started from a much more higher time frame, and from the daily perspective. So, I'm already on this sell trade. So, if you want to enter this trade, feel free to enter. All right, I dropped this in my Telegram community, and I told them that the moment the market, Euro USD, the moment it breaks below this point and makes a retest, they should take a sell to this point. And this is clearly 1:4. Of course, you already know the rules of my trading. I said this year is going to just be 1:4 risks to reward. All right, 1:4 is okay. And this trade, I'm just risking 15 pips to make 69 pips. These are at 4.66 pips. All right. So let me go back to the analysis. Okay. So Euro USD on the daily time frame. On the daily time frame. All right. 1D. So on the daily time frame, I've been able to see that the market is trending to the downside. All right. It's trending to the downside all of this while because before now we're going up. For those that for my students, I usually tell them the easiest way to know the trend of the market is by is actually by plotting a trend line. So that's why it's called trend. All right. So you can see when I plot this trend line, it's pointing to the upside, showing indicating that the market is flowing to the upside. So all of a sudden, we started coming to the downside. This is it. So we're going to the downside. So that's why, and this is not just the reason alone. All right. So some persons will be like, why is the trend line this way? Why is it like this? Why is it like this? Like I always say, I love using, for you to get an accurate trend line, plot, make it to be what? Line chart. So when I change it to line chart, you can clearly see that I plotted it touching these peaks, all right? Peak, peak. So I'm waiting for what? The third touch of this trend line. Okay. So meaning that since we're waiting for the third touch of this trend line, we should be doing what? Look, projecting towards this line, because that is where the liquidity lies. And some people will be like, why is this line? Why do I have this line? It's just to show you that we're doing what? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. All right. So that is clearly what is happening on the daily time frame. The direction is this line. All right, we're to go to this line. So two things are involved. Is either we'll break above it or we'll continue going to the downside. This is what I see on the daily time frame. So now let me put it back to this line chart, to candle, right? So now coming back to the 4-hour time frame. Now let's load. I want to show you something. Now on the 4-hour time frame, this is clearly what we call breakup structure because the market has been doing lower lows and lower highs. You can see it. Whenever it goes up, it breaks. So it broke this low, causing another lower low. Then the normal SMC rule is that once there is a breakup structure, you're supposed to mark out what? This other block. All right. And expect that the market to do was come to that place and strike to the downside. But what did the market do? Let me zoom in clearly for those that are not seeing. The market did not respect this completely. But if I go to a more lower time frame, we see that there was a little pullback, which was supposed to start coming down, but the market broke above it. And of course, you know, there's what we call break and retest. So here was supposed to act off as a resistance. Then the market broke above it. So it's now acting as what? Support, making the market to pull to the upside. Not only that, there's also called breaker block. Once an order block fails to hold price or supply zone or demand zone, all right, it becomes a breaker block. So that is what is happening here on this 4-hour time frame. So the market broke above this resistance and now it's now acting off as what? Support. All right. So now, having seen that, I now came down to the 1-hour time frame. All right. On the 1-hour time frame, what I did first was to change this to trend. I was just looking for a way to continue this movement to the upside. So I now saw that, okay, look at, no, not really on the, I think 15 minute time frame. 15-minute time frame. Exactly. So on the 15-minute time frame, I was able to see that the market did this, made it this touch, second touch, third touch. So I'm anticipating that the market is going to do what? Drop down. Now, that is one dangerous thing about trend line. Trend line traders would want to do what? When wait for the market to come to this place to buy off. When the market is going to respect the bid, then take their stop losses because they know that multiple persons would want to buy from here. They will manipulate them off. All right. Then do what? Buy to the upside. And remember, the direction is what? We are buying to that trend line above. All right. So this is what I'm expecting. Ideally, one is not supposed to take a reversal trade. We're supposed to wait for the market to come to this point. And you can see, as an SMC trader, I don't trade just mere using trend lines. All right. I've been able to see that, okay, now let me turn it back to candle. I've been able to see that the market made these touches, touch. I'm expecting the third touch of this trend line, which is, I'm just using this as a confluence, but then there will be a manipulation of this trend line. That's one dangerous thing about trend line. So the market is going to manipulate those that are trying to buy early, causing an inducement. So you can see I marked out this place as an inducement, okay? So overall, it's very dangerous to take a reversal trade. So here, as an SMC trader, when I now came down to the 5-minute time frame, the time frame I was when I started this class, all right? Now, I was able to see spot out. That's one thing about SMC. Spot out break of structure. Spot out is supply zone. So I was able to see this break of structure. All right. Number one, I'm able to see this liquidity. All right. Or you can call it inducement. Okay. So this is on the 5-minute time frame. This is a what? A demand zone. We're talking about demand zone. We're talking about place to buy from. Okay. Or you can call it bullish order block. Okay. So even if you don't want to get on this trade, on this sell, there's also an opportunity for you to do what? To involve in the buy to continue to the upside of that trend line. But, you know, I said 1:5, 1:4 is okay. So now this is what we call, let me plot this now. So this will now be our target for take profits for the buy. All right. So here now is our take profit, or you can call it buy side liquidity, BSL, buy side liquidity. So here is our breaker structure, liquidity, buy side liquidity, as in buy side liquidity, or you can call it TP area. Okay. So these are the confluences. So I'm not just trading off this trend line. Okay. I'm just using it as a confluence that this is what is going to attract price to the downside. You can see I've just deleted it. And let me delete this also. All right. So let's say you're not on this buy, on this sell, you want to wait for a buy, which is nice. So it's not good to counter trade. All right. It's not good to counter trade. So you wait for the market to report to this point. We call it POI, point of interest. This is where you're expecting that, okay, the price should come. This is our demand zone. All right. So this is our demand zone. So we're waiting for price. Ideally, that's where we're supposed to wait for price. All right. So this selling here is a little bit risky, but I already have my confirmations as to why I'm doing this, because that trend line is attracting the price to this place. So this is it. So this is the buy side liquidity. This is demand zone, and we're waiting for price. I'm just risking 19 pips. All right. I'm targeting what? 98.9 pips. All right. So this is clearly uh 1:5.4. But if I bring it back, but this is where I'm targeting, okay? I'm targeting that market should break there. So even if it's here, it's 1:95. But I left it there because I know the market is going to break it. All right. So this is clearly what I see on Euro USD today, being the 7th day of January. So if you're not confident about taking this sell trade, then just expect the market here. All right, then you buy. So that is the proper way of taking trades. All right, that's the proper way of taking trade. Don't try to counter trade or counter trend. So just wait for the market to do this, then we'll continue. Remember, on the 4-hour time frame, I told you that we're rejecting of a support because there was a resistance that was broken, which is now turning support. So we're waiting for the market to return to this point as SMC traders, because there is a break of structure, being able to see liquidity. This is what is going to attract price to the downside. Then this other block is where we should take our buy from, and that is it. Okay. So if there is any question as regards to this, please drop it in the comment section. And if you want more knowledge about SMC, you want mentorship and guidance, please do well to contact me or leave a comment in the comment section. Thank you. Do have a nice day ahead.